I recently had a prospective client reach out to me with the following situation. With several years until retirement and no income to speak of due to their diagnosis, what do you do as a financial professional? If you've been taught that investment portfolios are only constructed for long-term growth aligned with major indices, you might have turned this case down. I believe that's a misconception that needs to be corrected, and I'll do my best to address that today. Have you ever had a client walk in needing immediate cash flow and you felt stumped on how to build a portfolio to meet that type of demand? What if I told you there's a strategy that not only could meet this need, but also helps you stand out in a sea of financial advisors? Stay with me and I'll show you the ropes. Now, before we get started, let me just say that this podcast episode, this YouTube video, will not be financial advice. It will not be investment advice. And the reason for that is because there is no circumstance under which I would offer you, a stranger, financial advice or investment advice without creating a comprehensive financial plan for you. So now that we got that out the way, we can talk about what we came here to talk about today. Now, what we came to talk about today is the fact that I recently had a prospective client reach out to me with the following situation. And this is some of the details, but you'll get where I'm going. They were permanently disabled and unable to work, and they're fairly young. They'll be 50 next year. They were about to receive a settlement from the disability company that administered their work policy that would be given to them in lieu or instead of monthly payments going forward. With several years until retirement age, if you will, and no income to speak of due to their diagnosis, the question then becomes, how do they produce income to sustain a decent enough lifestyle pending a favorable decision on Social Security disability income? Here's the situation. They have roughly $400,000 in the IRA, and about $250,000 in cash, mainly from the settlement. What do you do as a financial professional or financial advisor? If you've been taught that investment portfolios are only constructed for long-term growth aligned with major indices like the S&P or something, you might have turned this case down. I believe that's a misconception that needs to be corrected, and I'll do my best to address that today. However, we're going to have to look that monster in the face on another video. But what I want to say right now is that what the client wants and what you think they want can be totally different. Let me say that again. What a client wants and what you think they want could be totally different. And all that really means is that what you must realize is that you are service provider first and financial advisor / planner, consultant, whatever you call yourself, second. The client in this case is always right about what they want. So you just need to choose whether or not you want to help them with it. So let's dig into some case evaluation. When might a client require a high cash flow portfolio? Well, in the case of my client, they need to meet short and long-term income goals due to their physical condition, preventing them from working. But you may have a client that has any of the following going on, which I think warrant a high cash flow portfolio, or at least a portion of their portfolio that is high cash flowing. Retirement goals that demand steady income, short-term financial goals, and or a desire for consistent cash flow over capital appreciation. You know, everybody just doesn't want to see and wait for their portfolio to go up. They may want something while they wait. And let me just say that in some cases, annuities can work. Actually, that's probably the scope of another podcast. But ironically enough, that was something that was considered in this case. Matter of fact, the client came to me with 2 annuity choices. But my recommendation was to go a route that mainly freed up capital versus constrained capital as an annuity would in both of those cases. Surrender periods, surrender charges, all this type of stuff, a cap on how much can be withdrawn without penalty, yada, yada, yada. There was a lot of constraints that had me go the route of non-annuity in this particular case. And before we get into construction, I think we have to talk about the components of total return because everybody doesn't know this. I actually learned this 15 years into the game from somebody that was way older than me, that knew a lot more than me. So let's break them down. I think you have to know the 3 total return components. They are the following. Delta, it's the change in value, and it's probably the most unpredictable. How well you know that a stock, if you bought it at 10 and it's going to go to 12 or to 8, how well do you know that? How well can you predict that? Well, I mean, you can use stock market averages, but typically speaking, they never, return what they average. Actual returns are so much different than average returns. The next one is gamma. It's cash flow, and it is crucial for immediate income needs. To be able to produce a cash-on-cash return of 6 or 7 or 8% for a client means a whole lot when they need the money right now. And last but not least, there is theta, which is basically the 8th wonder of the world, or compound interest. It's how you spend that portfolio's income or capital gains and allowing that to reinvest over time. Now, again, I learned this from an older advisor that had been in the business for over 30 years and has consistently provided retirement income for his clients. And I'll confess, when I first learned this method, I was a bit skeptical. But over the years, I've come to love its reliability and predictability. It's the greatest thing since sliced bread, in my opinion. And when you consider that the power and control it allows over two of the components in this formula, it's kind of one of the things that I think you might embrace also. So let's actually get to the portfolio construction. And again, this is not investment advice, just showing you a sample portfolio that I might use in these instances and how I would go about choosing these investments. So in my particular case, I had a number in mind, and without going into too much nuanced detail, I needed to find assets, preferably exchange traded assets, that distribute income at an annual rate of 6%. So that means if I had $1 million in a portfolio as a client, I would be looking for the portfolio to generate $5,000 a month or $60,000 a year. Now, as a financial advisor, if you're charging a 1% management fee, that means you need to find assets that actually generate $70,000 a year or a 7% return. So you can kind of do the math there. So my main source for this type of query starts on a website called cefconnect.com. This website has a wealth of information to help you screen for closed-end funds. Now, closed-end funds trade like stocks, but they differ in that when the fund begins, a set amount of capital is raised to go buy assets that will go inside the fund. After that period is over, the fund closes and trades like a stock. Because it works this way, every day there are buys and sells, obviously, of that closed-end fund based on supply and demand, like stocks that trade at a particular price. These assets inside the fund, though, were purchased at the beginning, have a different valuation. We call that net asset value. Now, the closed-end fund itself can trade at a price that is at a premium or a discount relative to the net asset value. Historically, closed-end funds that are trading at a deeper discount than, let's call it 6%, are considered cheap. And if you couple this with a high sustainable distribution yield, there are some pretty good components for generating some long-term cash flow and a capital gain. Other components, which we won't cover today, that could go inside a portfolio like this are high dividend paying stocks, real estate investment trust or REITs, high yield bonds, master limited partnerships. Those are a few of the things that I would put inside a portfolio that needs to generate high cash flow. All have their advantages and disadvantages and should be evaluated thoroughly before you include them into a client's portfolio. Now, I want to give you some last considerations for managing this type of portfolio. When do you sell? Is this going to be based on current discount to net asset value or a premium to that? If it's at a premium and you feel the premium will persist, you might want to sell and buy back when it's trading at a discount so you can reap the capital gain. But you have to kind of weigh that with whether or not you can actually replace the income source that you're about to sell. The other thing you might want to look at is when do you sell? Is this going to be based on dividend payment history? Dividend history is posted for nearly all these funds, so you want to pay attention to changes in dividend policy. Something to consider is the type of the distributions being made and what they're made up of. Is it mostly return of capital or is it actual interest being generated from the investment? There's different, formulas to this and ways this is generated that you want to keep in mind. Let me interrupt you for just a second though. Do you ever feel like you're on a constant treadmill, unable to attract the right clients or retain the ones that you have already? Maybe you feel like your services are undervalued despite the immense value that you do offer to your client. Listen, I've written a short but powerful 21-page ebook. I describe these 3 moves that you can make in your business starting right now that will actually double your revenue. All you need to do is just click the link in the description to get your copy and start today. Okay, now back to the video. Last but not least is investment policy. How much leverage is the fund using to generate returns and to accelerate returns, if you will, amplify returns? How does that particular leverage possibly affect the returns in maybe a down market? And how is it performing versus its peers or its category? And if it contains fixed income, what are the credit ratings and the mix of fixed income assets and the duration of those assets inside that fund? So as you can see, it is not just as simple as finding the deepest discount and the highest yield. There are several additional criteria to construct a portfolio that is not only generating the cash flow your client requires, but it's also adjusted to the type of risk they can handle. Alrighty, we've walked through a lot today, from understanding when a high cash flow portfolio might be necessary, to the components of total return, which I bet you didn't know, and even delving into the specifics of constructing such a portfolio using closed-end funds, for example. Now, as financial advisors, I think our primary goal is to serve our clients and help them achieve their financial objectives. Sometimes that means you're going to have to think outside the box, from the traditional investment box, that is, especially when faced with unique challenges, like immediate income needs that my client had. I think that using these strategies, you can set yourself apart and showcase your expertise and versatility while you're serving your clients' diverse needs. Now, if you found this video helpful and want to take a deeper dive to enhance your skills as a financial advisor, make sure that you subscribe to the channel, because I'm going to be putting out more stuff like this in the future. I want to equip you with the knowledge and the tools to allow you to thrive in this industry. But it doesn't end there. Like, we can have better conversations and more substantive conversations about this inside the FinServe Collective, which is our Discord channel, where we have a variety of topics that I would love to dive deep with you. I can't wait to interact with each one of you there, hear your perspectives, and we can grow together. Remember, in the fast-paced world of financial services, continuous learning and adaptation are key. If you equip yourself, serve your clients, and you're going to redefine success. And we can do that together. Until next time, keep investing smart and stay ahead of the curve.